welcome to my channel. My name is Ashley, and today we have Mr. Aaron Pickett with us. Aaron is from Chicago, but relocated to Vegas during the 2007-2008 crash in search of new opportunities career-wise. He landed on a career in sales and marketing and currently serves as a financial advisor with Northwestern Mutual. Today, we are going to be discussing how life insurance plays a part in your estate planning tools and tactics. Now let's get into this. Hey, Aaron, can you explain to us the concept of cash value in a life insurance policy and how someone can utilize that during their lifetime?
Yes, for sure. So how I look at life insurance, as life insurance, it is life insurance, but also to kind of make it make sense to people is that it's almost like a bank account with just more bells and whistles. And what I mean by that is that we can save money to the bank, right? And get a 0.03, 0.5% return. Or we can put that money into a high yield account right now, and they can upwards about 4.6%, 4.75%. Or right now, we can place some of those dollars into a permanent life insurance policy. And with some of these insurance companies, you get about, a 5% return on those dollars. So when you're placing dollars into that insurance policy, you're getting a 5.5% return, but just more bells and whistles. You're getting tax-free growth, you're receiving a dividend, and also, God forbid, something happens to the individual, there's a death benefit paid out tax-free to the beneficiary or beneficiaries, whoever matters the most to them. But also, while you're living, as far as that actual policy, you can access that cash for an opportunity, if not a rainy day. And there's several different ways you can access the funds. So you can borrow from the funds. If you borrow from, you can put the money back into the policy, and you just pay an interest rate, while you have that money out on an annual basis. Mm-hmm. You can do what's called surrender your basis. So whatever you put into the policy, you can take that money back out. But if you do surrender your basis, you just can put that money back into the policy. You can annuitize those funds. And what annuitize means, give you a guaranteed income for a time period certain. So there's several different ways that you can access those funds while you're here on Earth. And once again, for opportunities, if not rainy days.
Okay. All right. Well, thank you for sharing that with us.
You're welcome.
Subscribe to my channel to learn more about probate real estate, financial literacy, and generational wealth planning.